Hi everyone, it's Alex Sparks here from Sparks Finance and I'm your local mortgage broker in Bathurst. Today's video is how to improve your credit score for your home loan approval. Now there's a lot of different myths when it comes to credit reporting and how much of it is used within the home loan process, but these simple tricks and tips will help you position yourself really well to make sure that you shouldn't have any complications when it comes to getting a home loan. So the first one in here is obviously to pay your bills on time. Now, bills can be a range of things. Now, utilities and phone and gas, electricity, stuff like that, they go on your credit report. So it's really important to make sure that you don't have any, any outstanding payments or anything like that. Simple things like making your repayments on time shows your credit worthiness because you can continue to make those repayments and you have a history of doing so. If you let these go out, and start getting, overdue notices, this may impact them if they report that back to the credit reporting agency. So paying your bills on time is a really simple way to get into great behaviors and make sure that doesn't impact your credit. The next thing is to limit your credit applications, okay? So the more credit applications you essentially sort of go and apply for or even have a look at can significantly impact your credit score. And obviously the view when the bank picks that up and go, why have you had 15 inquiries on your credit report within the last 6 months? So when you're sort of shopping for car loan finance are notorious for going and just applying at all these different spots 5 at a time and then not being able to get all of them, which therefore you've got 5 different applications on your credit report, which is significantly going to drop your credit down. So limiting your credit applications, and this is why a mortgage broker is really important, because when you come and see a mortgage broker, we have access to 40 plus banks, right? We don't go and submit an application at every single one of those banks and go, yep, sweet, they'll all give you the money, this is the best option. What we do is we have a look at your current situation, we identify who is the absolute best lender for you for a variety of reasons. One, for your financial situation. We could obviously take into consideration rate, obviously take into consideration, the bank and who you like to deal with, how you like to deal with them. And then we just go with one application, knowing with full confidence that, we're very confident they will lend you that money. We're not sending it through, 10 different applications, okay? So this is where it's really important, especially with credit cards. If you want a credit card, just pick the one that you think is right. And if you keep getting declined by them, don't keep applying, because that's obviously going to impact your credit score because you're just applying and applying, okay? So limit the credit applications the best you can if you need to do them at all. The third one is to obviously build up your savings. So although some banks don't look at credit reporting, in isolation of itself, by having a higher level of savings, it just goes to show the bank that you do have surplus funds that are sitting in other accounts, okay? And by doing that, it shows the credit worthiness because it knows you've got that surplus there. With your savings, it also means that you're most likely going to therefore borrow a less amount of money and therefore will have a positive look on your credit report when you apply for those funds. So building up your savings is a great way, not only for yourself because you're not relying on credit, but it just goes to show the banks the behavior, the banks and the credit report, the behavior that you're looking at to make sure that you can adequately pay back the funds that you're looking to borrow. The next one in here is to consider the type of credit that you're actually applying for. So it's one thing to look and go, okay, great, I'm applying for credit for a home loan because I'm going to buy an asset that will hopefully appreciate in value over time. It's somewhere that I can live, or I'm getting an investment property or whatever that might be. Home loans or income producing assets and stuff like that are really good types of credit to go for home loans because they're secured against things. When people start going down the line of consumer credit, such as car loans, credit cards, store credits, afterpay, zip pays, buy now, pay later schemes, this is when they have a lot bigger impact on your credit than what a home loan would. So it's really important that we want to limit the consumer credit applications that we apply for to make sure that we can, show that credit reporting agency, that we've got everything under control. We don't need to rely on, post-payment of things. And therefore it's significantly going to help you by once again showing that good behavior around your credit applications. So where possible, reduce the amount of consumer credit and credit applications that you have, because obviously, they're at higher interest as well. So it is going to cost you more in the long run, but by doing that is a really good way to get better credit. The next thing is here to reduce your unused credit balances. So for example, people will come in and say, okay, well, do you have a credit card? And they say, yeah, I've got $1,000. I've got $1,000 on it, or I've got nothing on it, but your limit's $15,000. So when was the last time you used that $15,000 limit? Oh, I don't think we've ever used it. Okay, well, why not reduce that down to $3,000? It's the most you've ever used on that credit card. By not having that access to higher credit, you're going to put yourself in a lot better credit score because you just don't have, more credit available. You don't have that limit. So by reducing the credit balance that you do not use, or just reducing them all the way, is really going to help you. And obviously that will help you in your home loan application by boosting your borrowing capacity because you don't have higher repayments. When banks look at applications, they don't look at what your current balance is. So you might have $0 on the credit card, but what they're actually looking at is the $15,000 limit that you have, because you can access that if you want to. So getting rid of that unused credit limit is really, really important, and it's going to set yourself up for the long haul because you're not relying on having that limit there, and it's reduce your borrowing capacity and therefore increase your credit score because you have better credit worthiness. Now, this one makes me fucking almost cry, sorry for the language, but it happens with a lot of young people is they'll go, oh, I need to get a car loan to boost my credit. It makes me want to cry every time some guy comes in with this kid, apprentice, 19 years old, comes in with a Ford Ranger and goes, oh, can I get a home loan? No, you can't, because you've got this huge personal loan now, you've got a huge car loan, and obviously that's going to significantly impact his credit score, okay? I can't stress this enough, like from a bank's point of view, even if you have never, ever had any form of credit inquiry and you don't even have a credit report, what do you think the bank is going to look at more favorably? You getting a car loan and you're paying $1,000 a month off that car loan, all right? Because you got the depreciating asset there in a car loan, or if they look at your bank statement and they see that same $1,000 just sitting in your bank account, going up every single month, not having debt against that, do you think they're going to look at that more favorably? Yeah, they are. They won't even, obviously you won't even have a credit report by that stage, but then you will have a credit report when you go for the home loan approval, because then you will apply for credit. They want to see consistent saving, knowing that you can make that saving. So people who go and get a car loan to boost their credit, well, one, do you even know why you didn't even need to boost your credit, all right? Because it doesn't matter, because you're buying an asset that is secured, is going to put you in a lot better light with the bank, because they can see, great, well, it's just the same as having a car loan. You're not paying for something you don't really need. You're not paying a high interest rate on a car that's going to depreciate over time. By showing that you've got consistent savings within your account is all the bank worries about, because they know that you can make those repayments because you're already in the behavior of doing so. Do not go out and get a credit card because you think you need to boost your credit. It blows my mind, but you see a lot of young kids from parents, that have told them these things, that's what you did 20 years ago. A lot's changed since then. We've got to be financially smart and set yourself up for the long term, and getting credit to boost your credit is not the way to do it, because it's high interest and it's just gonna be a disaster. Your borrowing capacity is gonna be significantly reduced because you've got access to that credit, so therefore you won't even be able to get a home loan anyway, most likely. So really important that do not get credit to boost your credit, okay? That will naturally happen over time if you show patience, if you even need to boost it at all, okay? A lot of people that come in, the best, the top of the range is a 1200, credit score. Even if you come in with a 750, that's still good, because it shows that you haven't got any bad credit, but you haven't got any good credit, and that's fine. It doesn't matter. They do not look at this stuff in isolation. So please do not get credit just to boost your credit, okay? That is my absolute main point, especially for the young people out there who are looking at getting their first home. That is my number one rule, and as I said, it makes me want to cry every time I see it. As I said, the credit score, once again, people often get, really worried about that. It's very, very rare that we've seen people get knocked back off their credit report in isolation. They may have other bad behaviors along with the credit report, which will therefore work out, but there's ways that we can look at it. But this is where understanding where you are financially, setting yourself up, doing these little tips can put you in really good behaviors moving forward, and will get you in the best position possible to get a home loan in the future. If you have any questions on this stuff, please don't hesitate to reach out. More than happy to run through these options with you, and hopefully we can set you on the right path to make sure you can get into a home as soon as possible. Thank you very much.